So, some of the things I'm going to talk about today were as a direct result of a conversation I had yesterday, and you will know who you are when you hear what I'm going to cover. But I figured it was a good opportunity. Here we are, a week ago, we were in even a more terrifying mode than we find ourselves in today. Um, I don't know if this is clear. It doesn't appear that it is by the screen over to my right. There you go. So a little bit of green on there, but obviously the markets are giving back a little bit, or more than a little bit of um, the fun they've had over the last couple days. So it's crazy that we can be here on a day when we're down what we're going to say is only 2.5 to 3%, and feeling like there's relative calm. A short time ago, like 5 weeks ago, this would have been a major raging news story on the news, but we have had such a string of 5+% moves for a long time, basically just down one direction with a couple of less unpleasant days intermixed in, and then the last 3 days before today sort of violently back the other way. So I think it's clear that type of uh, amplitude is uncommon, and it's not healthy. So I thought this would be a great opportunity to talk about a subject that is um, mildly controversial and has been more controversial at certain points in our past than it has at others, and that's our philosophy on hedging. When we do it, why we do it, what is it designed to do, and is it helpful? And so the question I'm going to put forth is, okay, so from time to time you have these positions that are only designed to perform when the market goes down. Isn't that market timing? Isn't that what you're doing? And I've always heard market timing is not smart and you shouldn't do it. So why do we do it? So my answer to that question is it is not market timing, and I'm going to explain why I don't believe it is. So market timing, which is still performed by a small and an ever shrinking group of people, by its nature is binary. Market timing, the true market timing is we're in, we're out, in, out. And so if you think about the last month, if anybody feels like they had some ability to call all of that right, go for it. What I view our hedging philosophy as, and what we attempt to do, I think of more as a volume dial, going from a 9 to a 7 or a 6. And I can relate it to the fact that when markets are this loud, or I'll use that term amplitude again, when the amplitude is so, let's see, what are we measuring with amplitude? When it's so loud, I think it's sensible to turn the volume down. And so our particular view throughout our firm, and I don't think I'm saying anything novel to put this out there, is this is not some kind of a V situation that we're in. This is a long, protracted trench battle that we're in, and our role is to protect and grow and try to make sense of the risk-reward trade-offs that we find in the world. So, I mean, interesting, it was just last Friday that the relationship between corporate bond and high yield and stocks were joined at a level they had never been. And so I think and I referenced this on Tuesday, right? Monday was brutal, and Tuesday morning was brutal. And when you think about the conditions, that was people flushing their assets out into the market at whatever price. It was the reaction to that extreme discomfort of get me out at any price, get me out in any for any set of conditions that's ahead. I don't want to be anywhere near it. And then boom, 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 3 days in a row. So that why I always resist this instinct, and why I just prefer to turn down the volume rather than turn it from 10 to 0 is because this again, the person who I was on the phone with yesterday afternoon, who is with us here, pardon me being repetitive, but the philosophy of staying and fighting and understanding that even though the market averages are taking giving back, let's say what a lot of what they got yesterday, our particular strategies are not in anywhere near reflecting that. So what we are always attempting to do is, first and foremost, make sure the strategies that we offer to clients perform as we have suggested that they should. That's the first thing that we have a duty to do. The second thing we have a duty to do is try to make sure that we are in a good portfolio of assets for what is likely to be ahead. And that has sort of changed over the last 60 days. If you track the last 40 things that were done in the long view strategy, we have made a determination that we're not interested in trying to call bottoms in airlines or cruise lines or hotels or anything of the sort. We're more interested in, okay, there is going to be a permanent adjustment and value will be redistributed among the remaining companies. So we, as part of our duty, is to understand how that shift is going to take place and to position our portfolios directly into those, right? That's why we don't prefer the sort of market-based approach, because the market is going to include everything, all the energy, all the airlines, all the cruise lines, or the largest ones. And I don't think that's better than owning specifically the companies that we want to own and that we have a high conviction are going to be part of our future for a long time to come. So that's the philosophy on why we add short positions when we do, and why we increase them sometimes and decrease them. And in the last few days, even though they have gone down as the markets have gone up, it does not bother me in the slightest, right? Because on a day like this, when the market's down, we're not down anywhere near that much. Turn down the volume. So philosophically, I think it makes sense, and it does put us closer to the center of the teeter-totter, where if we're in a clear trend, then, and again, we were in a 1 month straight down roller coaster ride of a trend, and thankfully the short positions we had, were awesome, and they looked awesome on Monday, even while everything else looked terrible. Well, as that has clearly moderated. So where we are now is where the next 1,000 or 2,000 points of the Dow goes. That's not as important, believe it or not, as the fact that this screen reflects some tiny bit of more sensible price action than what we've seen. So once we get the amplitude of the moves down to the 1-ish% range from 5, then all of a sudden the market will start to differentiate and will start to assign new value to the future in that way, in a more logical basis. But it's why we didn't cough everything up a week ago, and it's why we're comfortable holding on to positions, a short position that would potentially go down on an up day. We're never ever going to be short, and I said this to the person yesterday afternoon. I know of one particular firm that got pushed out of all of their positions by the firm that they do business with, pretty close to the darn lows, but were allowed to keep all of their short positions because that was the assessment of the people they dealt with at that firm. So all of the good stuff, all of the stuff at lows went out on Monday, leaving all of the stuff that just went straight down for the last 3 days. A true position of incredible torment. We don't have any of that to worry about. All we have to do is continue to do what we've done well over the last 25 years, to sort of stick to our knitting, hold our key high conviction long positions, turn down the volume when we feel like it's necessary or warranted, even if it's just so our own ears don't hurt so much, and always live to fight another day. I always talk about this. Having a lot of outs is always key, and we do, and we will. And so I have really, I'll leave one more note of gratitude, which is you all have all been incredible throughout this period, and I couldn't be more proud of all of you individually. There is so much pain in the world. There is so much pain, and I do hang around with a lot of people who have companies and are making these guttural, uh, uh, agonizing, excruciating decisions about people that they love and have done well for them over years and years and years. And their future is uncertain, and everybody's future is somewhat uncertain right now. But in terms of the financial approach, there's no question the math is the math. It's worked well, and it will continue to work well, and the process will work. But I can't promise that there won't be painful days between now and then. I can promise there will be, but I can also promise that the other end will come, and whoever is there with a philosophy and a process coming out of it will be part of the beneficiaries of the new era. And I hope that it is we go to some post-apocalyptic period of prosperity and joy and calm, and we can get that pent up demand unleashed, and everybody can go back to feeling like we did 6 weeks ago, which I think we're all feeling somewhat naive about 6 weeks ago, which is crazy. But how do you prepare for something that's never happened before, or it's never happened to us, none of the people on this Facebook for sure, because this is these are uncommon, and that's a good thing. And I hope, one thing I heard that was really smart, which is I hope the United States learns, so that when another pandemic inevitably is going to start to sweep through, we're a lot more prepared than we were for this one. I mean, and I do think, I have no insight other than what I read and see like you guys, but it's going to be a pretty brutal couple weeks of news. So I encourage you to get peace however you do it, and exercise and sleep and all those good self-care tips that we are now also familiar with. But from our perspective at Mirador, we're going to continue to stay and fight and do the very best job we can. I always say that. And if you have questions in between, one of you made the mistake of saying that these Facebook or these Instagram sessions were therapeutic. So the fact that you said therapeutic now makes me feel like I have to continue to do it. So we will continue to do it, and I do appreciate even some of you that joined late, like my wife. I do appreciate all of you, and I will look forward to chatting with you in whatever channel very soon. So, cheers.